Okay, everybody. All right, there was some questions about the now later strategy, and so I'm going to use this one as a live example. I'm actually in this trade. So as you can see, I'm on the 15-minute charts of the AUD USD, and I see our setup. We have triple arrows, very clean. We have the crossing of the moving averages. The two moving averages that we're using is the 18 for the magenta, and we have a 9 for the green. Okay, so in other words, the 9 moving average is and let me bring it over so you guys can see it. It's a 9 moving average, very simple. It's a simple moving average close. It's the setting. Okay, and for the magenta line, bring this over so you can see it. It's an 18 simple close, and it's magenta. And as far as thickness, I like to have them kind of large, so we'll use the second thickness. You can use whichever one you feel comfortable with. So for this particular strategy, the now later strategy, we're just looking for clean triple arrows, bouncing off our support dots, bouncing off of the trim, the AA lines. We have our help line turn green, and we have our confirmation mountain, the Osma, which turned green as well. Then we go to the 30-minute chart for confirmation. Now, I will say this, that on the 30-minute chart, you may not always have the triple arrows in place. You may only have 2 of the 3, okay? But what we're looking for is at least the big arrow, the support dots, and maybe one more arrow as confirmation of directional support. And as you can see here, this turned green here. So we have a little directional support. In this situation, we have a perfect looking triple arrow as well, confirmation. And then we try to go to the 1 hour for one more confirmation. As you can see, there's no triple arrows, but we do have the big arrow saying, yes, it's going to go up. It is also bouncing off of the trend lines right here. And we have the mountain turn green. So we have multiple different time frames that's confirming the up. And that's the reason why we took this trade. Okay, now, there's a couple of things you can do. Number one, you can take one large position and just move your stop loss right below the big arrow on the 15-minute. And you can also layer it in with multiple positions, as we normally did in the past, where you can open up multiple positions and scale it in, seeing that it has potential for long term. One of the safest ways I would say to do is open up one large position, your first position, and just do a 2-to-1 risk ratio, meaning that this is going to be 27 pips right here. And so you can move it up to 27 pips and do a 1-to-1 or double it up. It's up to you. I like to move it up to the 30-minute right about there. Okay, see this low here where it came to the last one. But basically you can measure your pips and you can do 1-to-1 risk ratio or 1-to-2 risk ratio. And that will be on your first position to get you in and out with some good pips. Then you can open up a second position, a smaller one that's much smaller, and just have the same stop loss but no take profit on it, and just put a trailing stop, as you know how to do that, so that if this position continues to move straight up like it's showing potential to do, it looks like it has the potential to go right back up to the trend line top right here, because as you can see in the prior move, let me bring this screen over. See, prior move, it went all the way down for a tremendous number of pips. Let's take a look at this, kind of measure that out from here to here for 172 pip move on the way down. So that's the reason why we don't rush to, always take everything off and just clear it just because we made 10 or 20 pips, because you may miss the bigger move. So what I would suggest is, take a big position, kind of do a 2-to-1 risk ratio on the 15. So whatever your stop loss measure is, you can add that and double it up and move forward, and then add a second position and just let it run. Okay, or you can use the Fibonacci lines like we talked about off the 30-minute chart. You have multiple choices. One of the things I don't want to do is pigeonhole you into doing it one way or the other, whatever you feel comfortable with. If you feel like leveraging multiple positions, you can do that. If you just want to do one position and just get in and out, or if you want to do like I do, which is to put one large position in place and then put a smaller one in place, you can do that as well. But either way it goes, all we're looking for this particular setup is the triple arrows, support off the buy and sell dots. We have the help line saying yes, it's a go. We have the mountain saying it's a go. And then we go to the 30-minute and we look for directional confirmation, which we have that. And then we check for the 1 hour to see, hey, does it have long-term potential? And we do. The other sneak peek trick is that the time that it is right now is 10:32 a.m. Central Time. In other words, I get into these trades after the news have passed to make absolutely sure that in this situation that there's no chance of a major news event that was scheduled to pop off and interfere with the trade. And so therefore, at least I have less risk by doing it that way. Okay, so again, I suggest, as I've said before, that if you're going to get into this kind of trading for the scalp, the safer way to do it is to simply wait until after the market has opened, at least 30, 45, and even an hour after the market is open, whether it's the US session or the London session, just to make sure that all the major news have passed that can impact your trade and the market has now settled itself down. Okay, so that would be that. All right. Have a great day. Hopefully this video helped.